Welcome back to the second half of the Futures Show. We are less than 60 minutes away from the cash open for stocks on Wall Street. Futures are still suggesting a lower open this morning here in the U.S. Let's bring in our next guest, Scott Bauer, the CEO of Prosper Trading Academy, is joining us this morning. Scott, welcome. Happy Tuesday.
And you too.
I wanted to begin with what we're seeing here in terms of crude oil prices this morning. The WTI to 101.53. You've got the Brent to 104.60. I mean, anytime you see crude elevated to this extent, it's going to weigh on sentiment. I guess I'm wondering, is that's what's impacting the indices this morning?
It is, plus more uncertainty about, the news that we saw, this big caravan, if you will, heading towards Kiev. So just more uncertainty about what's going on there. And also the fact that the talks yesterday between the two countries didn't really seem to, do anything whatsoever. So yes, this is definitely adding volatility to the marketplace. You see crude on the big rise like that. Nobody likes that. The markets don't like that. Quite frankly, Ben, you know my position on this. I have been selling every rip that we have seen in crude because it seems to me that we get these rips higher, and then we back off a little bit, rips higher, back off a little bit. And until that pattern stops, I'm going to continue the same way of approaching it as I have been.
Scott, in terms of this, it seems to have this kind of snowball effect, as you mentioned. Again, there's multiple sort of components to this rally that we've seen. And I mentioned, again, it sort of weighs on sentiment. But now as we haven't really focused too much on the demand narrative. It's been mostly to the geopolitical tensions and the premium that brings into commodities in general, not just crude, which we'll get into a couple of the other products in a minute. But we've got masks coming off for the most part across the U.S. here right now. I've never seen restaurants as crowded as I have over the last week or so. In 2 years now, it seems like. You've got, well, it's not necessarily right around the corner, but soon thereafter, the summer driving season, ultimately, it seems like there's going to be, again, sort of more fuel to the fire, so to say, in terms of RBOB gasoline prices on the rise. I mean, ultimately, that's where we really feel it. And again, at the pump. And I mean, it doesn't seem to, I don't see any end in sight, I guess is my point.
I don't either, but we know how fast this situation can change. And yes, all those things that you said are true, and people want to be back out there and moving around again. We've got the summer driving season just around the corner, but it's really the tension, the geopolitical tension that gives the immediate impact on the upside and the downside here. But yes, the trajectory absolutely is still to the upside. You've got OPEC tomorrow, not likely to change their plan whatsoever, which obviously is not going to help things. On the other side of the fence, you've got maybe the Iranian nuclear deal. Something does come through with that. That's going to add 1 million barrels a day to the marketplace. And you've also got all the talk still about, strategic oil reserves or strategic petroleum reserves, excuse me. And, let's see what happens there. But you're right, Ben. People want to be out. The demand is there, right? The demand is there. So when you combine the massive demand with potential supply disruptions, that's why you see this volatility.
Yeah, I've been telling our viewers, don't get tunnel vision here or too focused on a $100 barrel of oil right now. I mean, some other sort of production or pipeline disruption ultimately could spark prices. We could see 120 if that were to happen. But Scott, you mentioned you've been selling the rips, and if so, ultimately, I imagine you've been fast in terms of buying some of the dips. As we have seen pullbacks, again, it hasn't been only to the upside. The intraday volatility has provided a bit of a two-sided trade. But if we were to see some of that geopolitical premium come out of the market, where do you see it going back down to? I mean, do you see $80 a barrel oil again if we were to see some of those tensions ease, some of these diplomatic talks gain some ground here ultimately, and potential some of those off-ramps become a little bit more apparent? Do you see it down to 70? I mean, when you talk about some of the potential room to the downside here, what are you looking for?
I think 90 is really the kind of equilibrium, quite frankly, not just because it's a big round number. Maybe we get into the 8 handle, but I think for all the things that you said, the other reasons why, oil probably should be 80 plus a barrel. But I do think there's probably a 10 to 12% premium in there right now for geopolitical tensions.
Let's talk about some of the other products that we keep an eye on in terms of some of these geopolitical tensions impacted from the dollar as well, which doesn't seem to be as big of a factor recently as the dollar's been rallying. Some of these commodities have been as well. But, for example, gold, some major intraday swings. Last week, a big move up just shy of that 2,000 level. The bulls ultimately want 2,100, the all-time highs, to get recaptured there. What are you looking for in terms of metals, specifically gold?
That's another one that you and I have talked about that I've been selling every rip higher. And I wouldn't say they've been rips higher, but they've been moves higher because fundamentally you would think that gold should be at those 2,100 levels, right? As the ultimate risk asset, if you will, gold should be at 2,100. Why isn't it at 2,100? Is it because of cryptocurrencies? Is it because of other commodities? There's a myriad reasons why it's not. But it should be. So that's why I have been in the same camp there of selling every opportunity I can.
Taking a quick look here, we're looking at some of the 5-minute price activity right now, some of the intraday swings, but I want to take a hourly look at this because, again, gold has been, it continues to be trending higher, and we have seen some intraday swings, to say the least. The move here from 1785 up to 1976, and then just a quick look here at the bigger picture. You can see the weekly, and here's that all-time high up around 2,100. Scott, when we're talking about crude oil on the rise, ultimately prices at the pump, that does feed into the inflation discussion, but again, this is widespread right now. We were talking about it earlier in the show. You've got grains, for example, the impact that Russia plays out there as far as the wheat, you know, and some of the production that they have. I mean, ultimately it's across the board, not just wheat, corn, beans as well. We're seeing it in some of the metals, for example. So again, that snowball effect that we were talking about and the compounded aspect of some of these factors that we have playing on commodities in the inflation discussion and weighing on sentiment. I mean, it's widespread. The tentacles kind of are far-reaching.
Oh, yeah, pick your poison, right? You can look at the grains, you can look at the other metals like palladium, but talking about the grains, wheat up 9% again just this morning, corn and soybean up almost 5% each this morning. And quite frankly, though, when you break that down, the world trade on wheat is greater than for all other crops combined.
Wow.
And you know, we saw prices reach their 9-year highs last week. Russia is the third largest producer after China and India. Ukraine is the 9th largest. So when you combine the two of those, that's 25% of the world's wheat production and almost a third of all global exports. So it's easy to see why that pressure is massively to the upside. I think they're going to take out those recent highs that we saw across the board, whether it's wheat, soybean, corn. And that I don't see abating anytime soon. I look at that a little bit differently than I do from the oil, from the energy complex. I think that because of the massive amount of consumption worldwide in the grain space that we need on a day-to-day basis, that's something people cannot go without. I think that upside trajectory just stays in place here.
Scott, we were talking before we brought you on about how the Fed was going to have to navigate these murky waters tied to everything we've discussed, whether it be commodities or energies, I should say, on the rise, some of these grain markets, prices at these elevated levels. Ultimately, that's a factor for the U.S., but it's a factor for the ECB to consider as well. I mean, again, we've got a meeting coming up soon there. The euro currency, for the most part, is faring pretty well. But, I mean, Europe being Russia and Ukraine's nearest neighbor, ultimately, the Western world, Europe being their nearest neighbor, this is maybe even more so an issue for them to consider.
Central bankers around the world are absolutely being put to the test right now. Yeah. I almost think it's a little bit easier for Powell and the Fed here to navigate the next meeting by going 25 basis points. They can absolutely justify that. People, the market have accepted that we are going to get that rise. Should they go 50? Not in this environment. If they did, would it be a massive shock? Probably not. 25 is the safe one for them. But you look at the EU, you look at other central bankers around the world, and their hands are probably tied more than the Fed is.
Okay, probably not a massive shock, Scott, but we were kind of just talking about with JB and sort of hinted on the topic, the subject, the idea that the biggest focus here shouldn't necessarily be the first rate hike, whether it's a quarter or 50. It should be more how far down the road, how long this continues, correct? And where ultimately the last rate hike people focused on.
No doubt about it. And that's why I think that the move in a couple weeks at the March meeting is the easy one.
Yeah, okay, point taken.
Either one. That's the easy one. It's the rhetoric. Okay, are we going to get 7 or 9 or 11? What is their dot plot? Where do they see this going? That is where, what may totally move the market one way or the other. And I think they just have to proceed unbelievably cautiously at this point.
We're looking at this chart again here, Scott. We'll let you get out of here, but I was noticing this morning crude oil still continuing higher. Normally, crude and the TNX and this purple line track each other very closely. You can see that. Now, they do diverge at times, but here's one of those times. You can see, again, rates have come off, tied to some of these geopolitical uneases and unknowns in terms of the impact it could have on global economies and central bankers, as you were just mentioning, while the geopolitical premium still apparent here in terms of this run-up in crude oil. Again, the WTI overnight to 101.53. Hey, Scott, thanks for sharing part of your Tuesday with us. Always appreciate it. Thanks to you, Scott. Scott Bauer is the CEO of Prosper Trading Academy. You can check him out there. And, well,